All right, so welcome. Let's see here as we get going. Got a few things to take a look at today. Actually, I have to work a little bit on my scans today. So I'll probably be doing a little bit of work to check some things out. We'll try and do something useful. And then we'll take a look at just individual stocks. So I'm going to go ahead and chat a little bit about some certain specific stocks here and do my scan as well. So I'll be looking at a lot of different scans here that I have. That's kind of going to be partly my focus a little bit. So as we check that out, I've got a couple things that as I'm looking for some Keltner channels, I'm going to go ahead and do a few quick checks. So one of the things I notice here on some stocks, just like UAL and KMB, these are the ones that I'm noticing that are basically pushing up at the upside. So I wonder if this will come back into the area of moving averages, and KMB as well. So these two kind of I'm looking at for a possible potential pullback. And then as I'm taking a look at the bottom edges here, there's a handful of stocks that are hitting some extreme levels here. And if we look at some of the changes, let's go ahead and do a quick scan here. And I've got these scans. Actually, I could probably pull them up over here for you guys. Let's see, watch list, US stocks. And then we will do a scan on the Keltner bottom edges. Okay, so there's a ton of stocks here. I'm actually going to go ahead and narrow it down to my personal watch list with all the weeklies. So there's about 24 here. And if we check out the ones that have oversold a lot, these are some things you might want to look at for a possible bounce. And oftentimes I look at these kinds of things for a possible pullback or retracement. So I actually color code these a little bit more blue, because if I have them blue, I know that it's different. It's a different bar. It's actually a signal bar to take action. So we've got HSB also. So if I'm looking at stuff like this, I'm looking for a possible retracement to over here. So stocks again can explode up, or we can get here and pull back in. So what I'm doing here is, as I'm looking into stuff like this, I'm starting to go ahead and check out, okay, can we pull back into certain areas? So this is how I start building things out. And this is what I'm kind of looking at is, you know, as I'm watching the overall stuff that's overextended, are we extended to the downside or are we extended to the upside? So a lot of stocks are kind of moving down. You can see we've got an extension over here. Here we had an extension, we pulled back. There was kind of your small trade right there that you could have taken. Again, small little increments, small trades, a lot of trades all over the place. That's what you want to do. IBM TLT, if you get a chance. Yeah, TLT bonds not doing as well. So yeah, if the TLT, we're back into the moving average. Trend overall is lower, and usually bonds don't do as well in these kinds of conditions yet until this starts kind of rolling. So the TLT does well when they're looking for interest rates to kind of go down because it's a 20-year. But now they're thinking interest rates will go up. So, you know, most people play off the news. For me, from an extension standpoint, I think we already did our little bounce here. So I think we're still kind of along this line on a continuation. But let's check out kind of some of the longer term trends here. So if we look at the weekly, I think you are kind of extended on the weekly. I think you're due for a little bit of a pop here soon. And that is in part because I'm looking at, here's our double top at the top here. We get a pullback here. And we've got kind of a B, C, D pattern. Wow, bad handwriting. Okay, so A, B, C, D pattern is kind of there already. And when we look at something like this, we're already quite extended. So I think right here, we should get a somewhat of a bounce soon from the extension, but I just don't know when, obviously. But we've had this trend upward, and there is your A, B, C, D. So Overall, obviously, energy is negative. Doesn't take a rocket scientist to see that. But here, when we're looking at it, we've got support around 120 is kind of my thought. IBM, let's check that out. I don't know why my screen is flickering a little. Okay, IBM, I did a review on this one not too long ago. We've got a big compression on the monthly. And like, if you really look at it from a longer term perspective, it looks okay. But we're going back into the 90s, and I don't think I'd be alive maybe even by then. So I don't know. So we've had this, some sideways action, and we've got some compression here. So the big thing with IBM is it's just such a monstrous, I mean, bravo to them for all the space stuff, but here back in the 60s. But now you've got this compression, unfortunately. So trading it from this perspective, you got to have at least a 5-year outlook, I'd say. And then it could break up, or you've got this support here. That's a little tough. You've got some bearish volume spikes, so a lot of it's negative. It's not as positive. From a more recent trading perspective, I think slightly you are kind of extended. So you've got 140, and with a market down, meaning bad energy, a stock that's extended and a stock that's not really like sexy or amazing, I think you've got some room again to come back into the downside or pull back into the kind of the averages. So if we go back and look at kind of here IBM on the Keltner channel, you could see we're kind of extended here, and we could almost pull back into this kind of zone 135. So I think that's kind of what you're looking at from an average. Obviously it could come back and go down into those Keltner channels here, but we're already kind of, you know, at this level here, and you've got, there's a bad line. There we go. So you've got these few spots where you're already hitting resistance, and now you're looking for a possible pullback. So that's what I would see. We've got a gap here, acting weak, market's weak. So I think you'll probably see that also come to play. Actually, let me unlink this. We'll keep SPY up here because I have to keep an eye on that one. We'll just go 30-minute just to see. So that'd be just my thought on those. Okay. So looking at all this other stuff going on here. I mean, you got a lot of stocks that are just really extended. When you look at stuff like Netflix, I'll put it on the colored version for you guys. I made them orange this time. So we're really getting a downward trend in certain stocks. Like you look at Netflix here, PayPal, I mean, you're breaking 100. So a lot of stocks are just acting very weak and problematic. We just continue moving this trend in the downward. Or let's switch it to the bars actually. And then you can see it better. Candlesticks. So just a lot of weakness in overall markets. I'd say anytime there's a bounce these days, you're looking for probably selling into the bounces for now until we digest this move, and that could take a few months. You are seeing some really interesting stocks into some nice value, but these moves that are this nasty take a while to reverse course. And when we start looking at, like, let's take a look at Disney here. You can see I've got some blue for some bullish moves. I've got some light whitish, but here's kind of a previous move where we had a lot of negativity, started to get some nice into it, and then finally it took 1, 2, 3, 4 months or so of that move. And this one is worse. So we're already seeing 4 or 5 months into it. So you'll probably see another couple months, because after another leg down, take another couple months. That's just the digestion process. Facebook also continues to just be nasty and down. We've got earnings here on the 27th. So this thing is definitely not looking good, especially if this thing breaks below this. You've got some serious issues with a lot of stocks that haven't yet came down. Like, I don't think Amazon has really came down that much yet, because when we look at this stock right here, right there, we've still actually been sideways in Amazon. If you start seeing these big companies, like these big boys, coming down in a big way, right here, breaking this level, this will be an extremely nasty market, because this right here, you're playing with fire in that way. They're probably just waiting for earnings a little bit. But you see some of these things that are already really extended from a longer term perspective. And if that comes back to like 2078, that's when you'll really see some nasty stuff coming in. And that's just with a handful of stocks, you're gonna see that. Let's go ahead and take a look at this watch list that I have. So you've got Google right here coming out with earnings as well soon. So on a daily, we've got, a lot of chop here. You can see chop. Here's a little bit of trend because I got some blue. It just highlights it. Orange highlights a little more downside action. But overall, you can see we're just chopping in this range here. So there's a lot of trend here. Now we've got a lot of chop. So think about it, this like distribution, junk. And if you're a long-term investor, this is kind of when you just put a hedge on, pause your positions, and then later on you could get back into it. But if we get a nasty move like a Fibonacci level 50% kind of pullback or so into the 2000s, again, that's another 400 to 500 points down. And this, again, could be some significant problems here that'll keep pulling the market lower. So that's why I say is, as we're looking for this, if we get a pop back to 2600, you'll probably see some selling pressure coming in. Watching Tesla, like even with good earnings here, they came out with some earnings. I forget the exact numbers here. What was it? If we go in, so estimated was 1.642, actual 3.22. So they basically doubled up, but with Twitter stuff and all this other stuff going on, the stock was still extended and you still got some selling pressure coming in. So whatever the reason is, it's a nasty selling that's coming in right now with large volume. So it's definitely a lot of huge selling pressure that's coming right into this stock right now. And with that huge selling pressure, when critical levels, if you ever see a stock coming off the highs or near the highs with volume, you've got some serious issues. So this one, in my case, I'm looking at it, I think it's got some problems here. We've got a nice breakout here, but then you've got some serious and significant problems here in that stock. So it's definitely a bit of a problem there. So I would be a little more careful with these stocks, even though the ones that have been working really well or the loved ones, they just have issues going into them. There's only a handful of stocks that I think actually are doing okay or doing not so bad. There's some that are trending. Let me pull up this. Let's see what I've got here. I've got some that are actually, I don't have anything here. Okay, let me see. Let's kill that scan. Okay, so there's only a handful of companies that are actually trending kind of to the upside and doing okay. So I'm looking at things like Coca-Cola. They're doing well. So these things on a pullback could be an adding opportunity, but you're waiting for a pullback. So I've got something, pulls back to 63. I mean, with a weak market though, think about it. If you've got a market that's up and then the stock is going up, this is like a double check mark. But our issue right now is we got a market that's down. So market down, and a stock going up. You've got down energy against up energy. It's tough to go against the flow. Yeah, J&J. I actually have J&J right over here as well. So yeah, it's after a couple of stuff. Yeah, J&J definitely strong. Let's see if I'm gonna freeze up here or not. Takes a second sometimes because I got like a lot of indicators and stuff that comes in. There we go. J&J. Yeah, J&J is doing strong. So there's a handful like KSS here says it's doing okay, but it's still kind of choppy. XLP is doing well still. So they had the little pullback, but it's still holding up. So this one probably 78 looks okay from a bounce perspective. If you really look at it, 77, those are kind of what you're looking at. Consumer staples. J&J definitely looks strong. I mean, it's actually at the 52-week high area. When I have some of my scans, there's a few that are at the 52-week high. JWN, Nordstrom here as well, kind of holding up. not bad, but now we've got a little bit of a pullback. Earnings on 524. Ketchup. Ketchup's doing well. Heinz ketchup. But we're getting into a little bit of a problem area right here at around 45. So this'll be a little bit of a tough spot. So we've got 35 to 45 in this range. And you know, again, fighting against the market, it's just difficult. If the market's going up and you've got stocks going up, or your stock's going up, that's good. If the market's going down and you're trying to pick like one of the unicorns, it's very difficult of a market to fight. You have to be very selective during specific moments in time, or you know, short duration for that little blink that it goes to the upside. So some of these are, you know, Nucor. So you're looking at stuff in the steel industry also holding up. Like this one's doing okay. So as I look at this grinding upward, it's holding up fairly well. You know, and what do you do on a trade like this? You know, I mean, there's a couple of things you could do, but I'd be very cautious. So even if you're thinking like it can keep going, like what do we've got? 160. So NUE. Let's take a look. So you could always place a few simple things on here, but doing something around 31 days, I go here. Let's go even closer, 49, 47. By going closer, I'm actually going to be more protected a little bit, and you'll see what I'm doing here in a second. We'll just see here how we do this and construct a little quick spread, creating a little iron condor. In these kinds of market conditions, it's very risque, but this is how you might do it. So if I do an iron condor, I'm going to do a little different style here on this one. Okay, so if I'm bullish, I'm going to go ahead and pop an extra put maybe on here. Not that strong. Let's go ahead and add an extra put, maybe the 135. I could do something like this, or even move this down to the 145, 140. Now let's see here. And go about 130. Trying to flatten my downside problem a little bit. I might have to bump this a little bit, a couple more contracts here. So there we go. So just a smoother downside problem. Like if this thing gets tanked, I want some of that edge on that protection. And I still got room to about 193, 190 or so, because this thing's already been at 187. So, but I don't think it's going to go forever. So I think I've got tons of room there. So something like this would be not a bad spread or setup. So that might be something in here to throw in on the spread. Always get the spread filled first, and then your put, because you might not get filled on the spread yet. So you always get the spread first. I'm gonna go ahead and put it in together, but get the spread first, and I'll just put it in together with it. So you can see the put will fill way faster. And if you're still struggling to get the spread and you might not even fill, now you got a single option that's not worth crap, or it's just, you know, you got to really pay up for it. So get the spread first, then get the put. So we'll push it a little bit just because I'll throw it in anyway as some example trades later on that I can use. But this is the approach I would do in this kind of market condition. If you want to do an iron condor or something, you definitely put an extra put on it on the side. That's just like have your water with your meal. So anyway, we'll let that work a little bit. But, you know, stuff like Nucor, it's doing well. You got McDonald's kind of holding up, but even McDonald's, I look at it as being a little bit toppy already. And you've got earnings right here just around the corner. So at 428, we got into 260, kind of rounding now. So it's a bit of an issue. Yes, it is a safety play to some degree, but we're struggling, you know, right around this area. We're struggling in this zone. And you know, right now there's no trade to really put on it because we've got earnings just right around the corner. But as you look at, let's see, MO, another one doing fairly well. How do you want to play it? You could do a butterfly as well. It's another opportunity. Right now, we'll throw a butterfly on something like that. Let's see this new course still. You can see it's a problem. Like, you can't even get filled. That's the problem in some of these market conditions. It's just like you can't even throw the trade on. If you wanted to do an iron condor, it's a 4 legs beast, and they don't want it. Was I looking at the MO? So if you wanted some exposure on MO, again, check the earnings, 428. So 428, definitely can't do it. So move on. Okay, MPC, 5.3, again, not a lot of Costco. Costco's not for a while. I really thought this one would do very well, and I thought it'd come back and just do fine. But, you know, it's still not bad. It's still kind of holding up at this level, and it's okay. Compared to a lot of other stocks, this one's still holding up fairly well. And this, again, is what I say, is there's just certain things that are still doing okay and doing well. But when you kind of look at these ranges, you're kind of saying, oh, okay, well, where can it kind of go? You know, you're kind of coming back into this line as possible. But if you're playing it, again, as a long investor and a pop to the upside, could it come back to, let's say, 580? Sure. How could I play it? I'd probably do a butterfly on Costco. Costco's actually a little trickier to get filled, I found, when I did it in the live account. It always whips a bit with their pricing. Even here on the spreads, we've got 830 to 930. It's a dollar wide spread. I mean, you look at these spreads, you're basically paying a dollar wide. So it's pretty expensive, actually, from a bid-ask spread perspective. So it's really a pain to get filled on Costco. And now with the volatility, it's going to be wider. So we could try something like a 590. That's a 30 delta. And we just need it to pop a little bit. That could be a way to play something like this. And just reset it here. Get rid of the other stuff I was doing. You don't want to widen it too much. You know, some people try to widen their butterflies too much. Tighter is actually better in most cases because you have less risk exposed, but you might not make as much. So if you're new, definitely tighter is better. As you get a little bit more experience, you're just trying to look at the iceberg effect. So here, tiny bit versus a lot more. And this is maybe almost too much. So we'll go one more strike. Can I do a half? No. So I'll have to go one more strike and we'll see what that kind of looks like. Risk to reward. And that actually might be fine. And as long as my theta is not really negative, I've got a theta here that's still positive. So with a positive theta, or just I would break even theta, I know that I can just hang out in this zone without losing a ton of theta. So this is a good thing. And if you're looking for a pop, this is kind of a nice cheap way of doing it, risking about 190 to try and make it work. And then again, we'll just throw it in here real quick. I'll see if we get that filled. That one got filled. My new course still struggling. You can see right here, that's why you always fill the spread first, then the single. Okay, so we'll try and see if that works. So yeah, so Costco's one of the ones going up, and Campbell's Soup, of course. You know, you buy some canned goods. Typically recessionary times, Campbell's Soup. I did short DAL, this actually right here near the top, and it worked out already. Got out with a profit, and that trade's kind of done. So this one worked out okay, but you know, it's just so extended. Here's kind of what I looked at: A to B, B to C, C to D. And then right at D point, right here, coming into those zones, quick little trade, you know, a couple days. And let's see, Cigna, Colgate, also another one that kind of is catching my eye to short, and I'll tell you why. Right here, we've got resistance at this level. You also have an engulfing bar. So when you look at this bar, you've got selling pressure from the previous day that engulfed that previous bar. So it really ate it up. And then you've got some inside day. And again, another kind of engulfing bar to some level. Not fully, but just the core of the bar. So the second one's not engulfing right now today, but that one just a couple days back really engulfed it, which means I think there's some selling pressure. The other thing is we're just extended here. And I'm not saying, short it for life or anything. You're fairly extended here with a large pop and rise, but if this really breaks this descending line right here, then definitely it would, you're going to see some more major downside, but you're kind of topping at this area. So we'll see what happens here. But it's another one I would kind of look at. How would I do that one? Let's just look real quick for earnings check. 429. I can't do it. Earnings, can't do it. So if you got earnings on 429, it's just too close. So there's nothing you can do. Because then you're just trading it based off of earnings rather than an actual trade off the regular movements. Okay, let's see here. Dollar Tree also moving up. So as we look into this, we've got some upward movement, you could add it to a long portfolio. You could, try and see what's going on here on the minutes as well. Let's go into here. So you're kind of trading right at the average on the daily. And if we go into 65 minute, you kind of looking to reject, probably move away back to 165. So, but the trend is still to the upside. So there's nothing I don't want to fight this trend, but you got a market that's down, you got this thing going up. So it's just a lot of mixed signals here. When you start looking at stuff like this, IBM, we kind of talked about that. Let's check this out. So this one's kind of interesting. We've got earnings on 5.2 with a 5.2 earnings. You got a little bit of a pop here. So you've got some time where this can actually pop a little bit higher because you're coming right back into this same zone where it came back previously. So it could pop, but again, market going down, this thing kind of holding. It's a little bit of a tough situation. Sometimes what I like doing in these kinds of weird conditions, where you got some weird stuff going on, check out like all the US stocks, for example. And this is actually a nice time to trade some of the crap, cheap penny stock type stuff. Not necessarily penny stocks, but we'll look at price. I'll go something like 11 bucks. I'll do things that are also optionable, because sometimes these things actually move up in a weird way. So you start looking at stuff like this, and like you see this stuff right here. There's not a lot of volume on it on average, but like you start seeing this stuff, it's kind of gets really crazy, and you got a big pop. So what's nice about these is actually if you can short it, this is a nice opportunity. Like, oh, okay, well, I'll just nibble a little bit, that kind of thing. NKTX, it's just the problem is sometimes getting in and out. NKTX, let's just see what's going on. But it's one of those things, like if you want some quick trades, sometimes looking at these penny stock names in these market conditions could be nice. Let's just throw a quick cheap one on here. Again, defined risk, nothing too crazy, not betting the farm, not naked, because you want to be careful if you're ever shorting anything. And then we'll just throw that in, see if that gets filled there. And but yeah, because they pop interestingly well. Like look at this one, PSB, business parks. But this one's not a penny stock, but it's a lower liquidity one. For me, it's not a weeklies one. So I'm just looking at kind of some of the cheaper stuff. Okay, so here's a $13 stock right here. So if I look at this $13 cheap play, I'm like, it was cheap for a reason. And now like you got a lot of regular traders getting into this. We're near the tops around 20, okay, over the last year. So do I really believe in this company? Is it going to be like amazing and stuff? Probably not. So VERU. Again, it's something I'd probably short VERU and throw, actually I'd probably just do 17 days on this and I tighten it in. And I would actually pair this with a put, because I'll show you what I would do with this. This is kind of part of the rocket strategy that I've talked about in the past, where we have on our classes, actually. So this is what I'll do right here. As this one, the single rocket strategy. So when we go ahead and look at this, you're selling a bunch of stuff. I'm going to go ahead and sell, let's call it 10. Okay, we'll go ahead and see if we get filled on that. I need to create another thing here soon. And then we'll go ahead and buy a deeper put. I'm going to go about a 60 delta. But not 17 days. 31 days looks good. It's 17 days is too short. Okay. Let's see, what do we got? Okay, maybe if even further. There we go. So we'll get a put there. Okay, let's see here if we kind of play with this and see if we get filled. So this is kind of the way I would look at doing something like this, is just seeing if I can get into this, get a theta decay, but still go ahead and capitalize from a single put option, because I don't want that put option to decay too quick. So I would prefer the verticals to get filled a bit first. But I don't know how liquid that's going to be. But this is like a prime candidate for something like that. And then as you look to some of these other ones, here's Whirlpool. Wow, you know, MX semiconductor area here. Also, little poppy. If they're too high, you know, in a weak market, it's good short opportunity. Like look at this one, barely trades any volume. So there's too many choices. So what do? I'm going to go ahead and just change my criteria a little bit. So let's go ahead and switch this around. Let's switch the criteria to 11 and call it 60. Optionable stocks. Then we'll do another one. We'll go volume greater than, let's do 500,000. Okay. So that should be a little bit better. A lot less candidates there. I'll start actually from the top down. So, and now what we can actually see is just start looking at some of the higher pops. And that's kind of what I would do, is I'd go with the market rather than, you know, something, well, CTVA pop. I probably missed this one. But right here, start looking through. You could probably narrow down the scan of things that are also above the 10 moving average or 20. But you can also kind of check for that. It'll give you kind of a list of candidates. But we can just manually scan it as well a little bit. And then if you get too tired of it, like here, HRL, packaged foods, Hormel Foods, it's already, you know, it's been grinding up, going up, but with a weak market, again, something to watch out with. With food stuff, you know, food's been going up in price, so maybe this is why this is also pushing to the upside. The market just continues to roll over. We're down like 90 points now on the S&P. Let's see here. All right, TXG. Okay, so this is still a lot of scans. So we're going to go ahead and add another condition, because it's still like 400. So I'm going to go moving average. I'm going to go moving average exponential, and we'll do, let's go 20. And we'll see for stocks that are, actually, let's go 10. We'll check for stocks that are above like a 10 moving average right now. Moving, crossing up above exponential right now. Okay. So that gives us only 60 results. So now you should be able to see stocks above that 10 moving average. So we can kind of take a look now. Twitter, yeah. UAL. So yeah, this is a nice airlines. I think are decent shorting opportunity right now. as maybe un-American as that seems. They're just a little toppy. They've been weak. I think if you're playing a reopening trade, maybe, but they're already the reopening trade was here. This was the reopening trade. The reopening trade is done from the airline's perspective, and now you're going to probably get a pullback in digestion for a little bit. And then once this part digests and we get beyond 60, that'll be your next reopening trade. So that'll be kind of a next leg up, but it's not anymore a reopening trade. It's now then a growth stage or back to regular life kind of trade. Okay, so here is LKQ, also toppy. Let's see, some of these are just, I wouldn't touch because of the volume. There's that catch-up one. Eat, leg. Okay, there's one, Conagra Food Brands. It's really a, I take a bet on this right here. 36, earnings at 712, so CAG. It's probably one of those right there. This one's not even, oh, NKT got filled, but this one can't even get filled on there. So CAG. How would I do it? CAG, I'd probably just do something as simple as verticals. Just 10 days, 17 days. Nothing too crazy. 10 days, a little bit of the problem with this one, there's not a lot of premium. You've got 35 cents and 50 cents. So all this premium here, there's not much there. So maybe the smarter approach here, actually, I might actually have to just do something right at the money, because there's no premium there. So you got to be a little more, you're just trading kind of what you have. And you're saying, okay, well, I don't have this, I have this. There's no premium on the outskirts. So you're doing something like this. So risking about 113 to try and make 87, maybe even 40 bucks. Not even going to be that much. So we'll go ahead and just kind of duplicate this. And then what we'll do is we'll put this at like 110, 107, and then we'll bump it up. See if any of these get filled over the day. I'll just work it. Work the trade. Okay. So there we go. Let that sit. See if anything happens. Maybe it does, maybe it doesn't. All right. Next thing. KBH always reminds me of XHB. Okay, these stocks, I don't dare to touch stocks like this. These are very choppy. There's just not a lot going on with these choppy things. There's not much you want to do with stuff like this. Healthcare Trust of America, it's like, whatever, just move on. Gentex, VICI, Contra. So these are all stocks that are above the 10 moving average. And then, you're kind of looking at H&R Block. There we go. You could almost set an alert here if this breaks. That could be something to watch. Right now, I mean, it's still in its trend, right? And when it comes back, it's a buy the dip mentality for now, but the market is weak. So, even though as much as you want to short some of these things, it's like, is it cheap? Is it weak? Market's weak, but this one's still holding up. So you could set an alert, something like this here, let that go, and then set an alert right here. If it breaks it, and now you got yourself an alert set. Okay. Flowers Food. So again, same thing, stocks kind of going up, but be careful, right? Be careful on if you don't see kind of a toppy area, which here you kind of do, you've got a few zones. Be careful then taking the trade if you don't see something like this, because that's what you want to see. Is you want to see like, 1, 2, third attempt. So 3 attempts kind of is what you're looking at. You could do 4, you could do 5, but this is a nice opportunity for a possible downside move if it rejects. So this could be another one, FLO, but 519. So you'd have to go and do a trade here, FLO. There's no weekly options, and the premium, again, the premium's crap. There's only like 25 to 30, and you still got 265, and then you got 15 cents. So there's very difficult to trade stuff like this unless you're directly dealing with the stock. That's why like I make my own kind of list a little bit. DG for short, yeah. Yeah, Dollar General. Yeah, for sure. It's breaking that right there. Earnings 526. Yeah, it's not bad. DG does have premium, I know, because I've traded before. It's already moving, so this one's a little tricky. I'd be a little cautious because it's already broke. Since it already broke, I'd be more careful. Or getting into the breaking area, I guess. You're kind of right there. You know, you're right there. It's a little risky from I don't know. For me, I'm looking at it saying, I'd be a little cautious, but you know, maybe get in tighter here. And then I'd go kind of here. And then I do maybe like a 2-1 spread. And then an extra call. There we go. Extra downside there, just in case. This one, you know, it has me a little bit worried that, you know, it's been strong. It's still moving upside. You know, the volume's not mega huge on the downside yet. So I definitely trade a little bit cautiously. But this one, if it does play out, it could work out. Could throw that in and put it into the area. And obviously with the market down, we just keep going down, 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 down. Sometimes that becomes a problem where if you get a pop, actually, because we're coming right back to where we popped right here, you're coming right into this. And if this right there breaks, then obviously a lot more downside, a lot more problems you could have. And you can see you touched it like once, 2, 3 times already. And here, if we break that, you'll see trouble. But you also are at a point where in the past you've had this bounce. This is a concerning spot there too. So you have to be extra careful in this right there. You're coming right into it. Okay, we'll do this last little bit and then kind of wrap it up after this. All right, so RCL, Royal Caribbean. Earnings are really around the corner. I would be a little cautious trading this one just because the earnings are right there. Yeah, you've got some resistance right there, so definitely looks good for a breakdown. Also on the Keltner channels, you're breaking this zone probably to come into somewhere around the $70 price level. So I think it's not bad, but there's just might not be enough time with earnings. 5.5, so you've got, you know, we'll see what happens here with Google and Microsoft with the earnings there. But 5.5, yeah, you have to almost do the 3-day, which makes it very difficult for a 3-day option. I do butterfly. I do a butterfly on something with 3 days. Spread it out maybe like a 2-point wide and do some cheap shot or a cheap bet right here. Because now you've got, you know, you got massive theta decay. You just go down like 1 or 2 points and you take it off. So you're risking 26 to maybe make 28. So like a 1-to-1, really nice in that case. But the problem is it's just the commissions will chew you up a little bit on this one because you need more contracts. Even 10 contracts, you're still only looking at $100. You could start spreading wider the legs, but the problem with that is then you've got too much risk then, actually, because when you're widening the legs, the risk of it actually becomes more intensified. So that's a bit of the issue here. So even just 2 days into it, you know, it's nice, but the upside, it can be a problem because now you're widening the legs. So I'd still tighten it up just just a more appropriate way for those kinds of butterflies. Unless you want to go even more directional on the downside. But you have to be careful with these markets that when they're down big, they snap up big too. So have to be a lot more careful on these fast trades. But you could try and put it on and then kind of work the trade. But getting filled in these markets is really the more difficult part. It's very tricky and tough because they just whip you around very quickly. And if we look at the SPY right here, we just let's go to the 15-minute. So we'll go here. Let's go 15-minute. So we just continue to edge lower right here. Kind of came back, retesting some of those levels. I mean, this market just down big time. 65-minute, huge selling, like candle after candle, red. So, and you had that wild roar back a little bit the other day, but that can happen again very quickly. And you can easily go back. So definitely being short right now is a good time to take some profits down with the market already down 90, 95 S&P handles. That's huge. So you have to be very careful. But you are seeing a lot of stocks breaking down, just like Tesla, big time breakdown. So that usually has follow through the next week or two because earnings are done. And you might see a snap back up to 950. Or even retest that 980, but then usually you continue the flush lower. And it's just a lot of people starting to panic. You're getting margin calls in different spots. I mean, that's just what's going to be happening with people that are not hedged off, because otherwise you get some of these nasty movements to the downside. So anyway, that's all I wanted to kind of chat today a little bit, just to kind of get the flow going and check out some things with some stocks here. And just kind of browse through some sort lists. So enjoy the rest of the week ahead. We're going to go ahead and still continue our market seasons class. So definitely go ahead and check that out if you're interested. And we'll talk a little bit more about different strategies to do in different conditions. And you can see that on the Traders Fly website there. And then after this class, I'll probably be taking a little bit of a breather, and we'll be getting some more new classes more towards August time. I'll have to plan those out because then they take quite a bit of time, but we'll be doing things with 0 days to expiration and bearish correction strategies and portfolio strategies and that kind of stuff. So lots of other things that I'm kind of slowly working on, but it just takes a bit of time. So anyway, enjoy the evening, night, and I might see some of you guys later this evening. So take care.